When someone downloads the Lemonade app, what they're really downloading isn't insurance. It's a mischievous AI algorithm dressed in bubblegum pink, a machine that's quietly teaching an old-school, trillion-dollar industry a very expensive lesson. While State Farm still buries customers in paperwork and GEICO burns billions keeping a cartoon lizard employed, Lemonade settles claims in seconds. Snap a photo, tell the chatbot what happened, and boom, money hits your account before the kettle's even finished boiling. It feels magical, it feels human, but it's neither. Because Lemonade isn't just speeding up insurance, it's rewriting the logic of it using an app. It doesn't make money by denying you, it makes money by understanding you. Every pause, every phrase, every claim feeds an AI that learns not what went wrong, but who you are and how honest you tend to be. Founded in 2015 by Schreiber and Shai Wininger, the same mind who built Fiverr, the platform for gig work, Lemonade began with renters insurance. The one product the old guard couldn't care less about. It was cheap, simple, and ignored, perfect for disruption. From there, the plan unfolded like clockwork. Renters became homeowners, homeowners added pet coverage, pet owners bought life insurance, and soon enough, the same pink app was insuring everything from laptops to Teslas. Cross-selling surged over 100% in a single quarter, and what started as a niche idea became a full-stack digital insurer spanning the US and Europe. By 2025, Lemonade had over 2.7 million customers, $1 billion in premiums, and a model that made old-school insurers look prehistoric. Its headcount was shrinking, margins were rising, and its AI was learning faster than any human workforce could dream of. But here's the insane truth. Lemonade didn't just make insurance faster. It turned it into code. It transformed trust into data, and then squeezed every last dollar from that data, all while convincing a generation that the friendliest company in finance was also the most futuristic. And yet, beneath the emojis and charity donations is a cold darkness that must now be brought to light. Do me a favor, hit subscribe, because by the end of this story, you'll see exactly how Lemonade plans to out-automate the old giants, expand into autonomous cars, and maybe, just maybe, become the blueprint for every insurer of the future. Right, listen here. For over a century, the insurance industry has been allergic to innovation. The same dusty giants, Allstate, State Farm, Progressive, GEICO, spent decades drowning customers in forms, fine print, and hold music. It was an industry where the only real innovation was finding new ways to say no. Then along came Schreiber and Shai Wininger, two tech veterans who decided that was nonsense. Schreiber and Wininger never sold a policy in their lives, but they looked at this trillion-dollar behemoth and thought, why not rebuild it from the ground up with software? No agents, no paperwork, just algorithms. They called it Lemonade, partly because it sounded harmless, partly because they were about to squeeze the industry for all it was worth. Their plan was beautifully simple. Start with renters insurance, a cheap, low-risk corner of the market the old guard didn't even glance at. It was perfect. Millions of young people renting flats, owning expensive gadgets, and completely uninsured. So Lemonade made insurance feel less like a contract and more like texting a friend. A chatbot named Maya would greet you. Hi there, I'm here to help you protect the things you love. Within 90 seconds, you had coverage. No forms, no agents, no nonsense. It was psychology disguised as service. Where the legacy players treated customers like liabilities, Lemonade treated them like participants. The company took a flat 25% cut of every premium, used the rest for claims, and donated what was left to charity. In theory, that eliminated the incentive to deny claims. In practice, it made customers feel like they were part of something good. And it worked. By 2020, Lemonade had reached 1 million customers, faster than Netflix, Spotify, or Amazon. The company went public under the ticker LMND, becoming only the second public benefit corporation ever listed on the New York Stock Exchange. Investors loved the story. Idealism meets algorithms, empathy meets efficiency. But what really impressed analysts wasn't the marketing, it was the math. Lemonade's AI could process 1,000 claims in the time it took a legacy insurer to process one. Its expenses were a fraction of the industry norm, while its customer base exploded. Meanwhile, State Farm still relied on 100,000 agents and a century of habit. And that's the moment the tide began to shift. Because Lemonade wasn't stealing customers with discounts, it was stealing them with experience. People didn't just switch for lower rates, they switched for relief. No phone calls, no hidden fees, no suspicion, just instant service and a smile. The average Lemonade customer was under 35, urban, and digitally native. The exact demographic the old insurers failed to understand. To them, Lemonade wasn't an insurance company. It was a lifestyle brand that happened to sell protection. Once they joined, they stayed. And once they stayed, they bought more. Renters added pet insurance. Pet owners added life insurance. Drivers bought car insurance. By 2025, cross-selling made up nearly a third of all new policies. And Lemonade had something legacy insurers could only dream of: customer affection. Still, under all that friendly branding was a ruthless efficiency machine. Headcount fell 2% year over year. Automation handled the work of entire departments, and the company's gross loss ratio, the percentage of premiums paid out in claims, dropped to 67%, one of the cleanest numbers in the business. In simple terms, the gross loss ratio, GLR, shows how much an insurance company pays out in claims compared to how much it earns in premiums. Here's the basic idea. If Lemonade collects $100 in premiums and pays out $70 in claims, its gross loss ratio is 70%. The lower the number, the better, because it means the company is keeping more of its premium money instead of paying it back out. So when you hear Lemonade say their GLR dropped from 79% to 67%, that means their business is getting more efficient, fewer losses, better pricing, and stronger margins. The gross loss ratio tells you whether an insurance company is actually good at being an insurer or just good at pretending to be one. While the dinosaurs shuffled paperwork, Lemonade's algorithms were learning, and they were learning fast. The company's growth strategy is brutally simple. Keep improving margins with AI-driven pricing. Cross-sell between renters, pet, life, and car insurance. Expand across Europe and eventually into health, travel, and anything else that carries risk. Next, we'll look at how Lemonade's friendly little chatbot became one of the most efficient machines for reading human honesty ever built, and why that makes it both brilliant and a bit unnerving. It all starts with Maya, Lemonade's ever-cheerful chatbot, who never sleeps, never complains, and never forgets. You type, "My dog knocked over the TV." She replies, "Oh no, that sounds rough. Let's get this sorted quickly." You send a photo, confirm the price, and before you've even put the kettle on, the refund's in your account. It feels like magic. But in truth, it's data science. In a pink hoodie, Maya isn't simply processing claims. She's learning you, how you type, how long you pause, how your tone shifts when you're nervous. Every interaction becomes another line in Lemonade's behavioral database. The company's AI doesn't just calculate risk, it measures honesty. Traditional insurers have armies of adjusters, endless paperwork, and call centers full of polite misery. Lemonade does the same job with lines of code. The result? Costs plummet, accuracy rises, and customer satisfaction climbs to levels the old guard haven't seen since the fax machine was considered innovation. This is what Silicon Valley calls operational leverage. With automation doing most of the work, Lemonade's expenses are kept extremely low, even as revenue jumped 34% in 2025. That means the business can grow without hiring. And here's where things get properly cheeky. The algorithms don't just process, they sell. Once you're inside Lemonade's ecosystem, the app gently nudges you toward your next need. Each cross-sell improves profitability. And it's not humans doing the upselling. It's code, optimized through millions of tiny behavioral tests. In a traditional insurer, Sales reps push products with scripts. At Lemonade, machine learning decides when you're most likely to say yes. By 2025, nearly 30% of new sales came from existing customers adding coverage. And thanks to that snowball effect, revenue keeps compounding, even if customer growth slows. Of course, the real question is whether these models are just making Lemonade efficient or making it omniscient. Because the more data you feed a system like this, the more it starts to anticipate what you'll do before you do it. Next, we'll look at how Lemonade took that predictive power and used it to build a new kind of relationship with customers. One built on empathy, automation, and a subtle kind of control that the old giants still can't quite see coming. By 2025, Lemonade had done something the old guard couldn't even imagine. It made people like their insurance company. The adverts didn't talk about fire or floods or freak accidents. They talked about you, your pets, your stuff, your life. It wasn't get covered, it was join us. That might sound like marketing fluff, but it's the foundation of the company's most powerful invention. The empathy engine. Traditional insurers thrive on fear. They show you a storm and remind you what happens if you're not covered. Lemonade flips that script. It replaces fear with purpose. In 2025 alone, the company donated over $2.1 million, bringing its total to more than $12 million since launch. To customers, it feels like they're helping the world. To Lemonade, it's data-driven altruism, a clever way to keep claims low without sounding stingy. The results are stunning. Lemonade has more than 2.7 million customers across the US, Germany, France, the Netherlands, and the UK. Roughly 70% of them are under 35. Most are first-time insurance buyers who see the brand less as a policy and more as a lifestyle. That youthful base gives Lemonade something priceless: time. A 25-year-old renter might stay with the company for decades, gradually adding policies as life gets more complicated. That's not just customer retention, it's compounding loyalty. Legacy insurers have to fight tooth and nail to get new customers. Lemonade simply grows with theirs as they age. And every time a customer adds a policy, a pet, a home, a car, the AI gets smarter. That's what investors call the Lemonade loop. By 2025, Lemonade's car insurance business covered 42% of the US market, thanks to its 2022 Metro Mile acquisition, which brought cutting-edge pay-per-mile tech into the fold. It's a perfect fit for their young, urban base, people who drive less but still need coverage. They've even linked up with Tesla's API, letting drivers connect their vehicle data directly to Lemonade's system for real-time risk scoring. The safer you drive, the less you pay. It's a perfect feedback loop, and it's quietly rewriting how auto insurance works. Now, Lemonade is using the same playbook abroad. Homeowners insurance has already launched in the Netherlands, with France, Germany, and the UK next in line. At the early steps of a European rollout that could cover nearly 30 markets within a few years. For a digital insurer, geography isn't much of a barrier. Once the algorithm learns a country's regulations and risk data, it can scale at the speed of software. But Lemonade's ambitions go far beyond renters and car owners. Its founders talk openly about becoming an AI-first platform for every form of risk: health, travel, even autonomous vehicles. As self-driving cars and robo-taxis edge toward reality, Lemonade is positioning itself to price risks the traditional insurers can't even model yet, where there's no human driver, just code. And that's where its advantage lies. The old guard still relies on underwriters squinting at spreadsheets. Lemonade relies on machine learning, trained on billions of behavioral signals. The company expects to reach profitability by 2026 and sustain nearly 50% annual earnings growth for years beyond. Still, beneath the optimism, one question lingers. If Lemonade's AI keeps learning from us, predicting honesty, tracking emotion, shaping behavior, how long before it stops merely serving customers and starts steering them? Next, we'll see how Lemonade's bright pink revolution faces its toughest challenge yet, scaling its idealism into a global empire without losing the trust that made it special in the first place. by its 10th birthday, Lemonade had gone from a scrappy disruptor to one of the most efficient insurers on the planet. $1 billion in premiums, 7 straight quarters of accelerating growth, a reputation built on speed, ethics, and algorithms that never sleep. To the public, it looked unstoppable. The insurance company that finally got it. Take the Metro Mile acquisition in 2022. It was supposed to be Lemonade's golden ticket into auto insurance. Still, Lemonade kept marching. This is the formula that has investors drooling. Positive adjusted EBITDA by 2026. Nearly 50% projected earnings growth, and a cost base that barely moves. Lemonade doesn't hire armies of salespeople. It hires data scientists to make armies unnecessary. Each human role automated is a line of savings, and a new layer of intelligence in the system. Because while State Farm and Allstate sell fear, floods, fires, bad luck, Lemonade sells trust. A cleaner, friendlier, more idealistic kind of trust. Take the Give Back program. It's heartwarming, even noble, but it's also clever psychology. When people feel charitable, they file fewer claims. Fewer claims mean higher margins. Altruism becomes a growth strategy. And that's the quiet genius of Lemonade. Its moral mission doubles as its business model. Doing good makes it profitable to do better. But as the company expands into new territories and new kinds of data, from how you drive to how you speak to a chatbot, the paradox grows sharper. Lemonade set out to humanize insurance, but the deeper it leans on automation, the more it starts to resemble a bureaucracy made of algorithms. Soon, it could be insuring self-driving cars and robo-taxis, pricing risk with machine precision rather than human instinct. In a world where algorithms drive, decide, and insure, Lemonade might not just join the system. It might define it. And that's what makes this company so fascinating and a little unsettling. Now it's building an empire of digital trust. Efficient, scalable, and slightly inescapable. So yes, Lemonade is ethical, profitable, and expanding faster than anyone thought possible. But it's also teaching the world a new truth. When machines promise empathy, what they're really offering is control. And that control could just be the ticket to gobbling up the rest of the giant $1.7 trillion insurance industry in just the US alone. Do yourself a favor and subscribe, because next time we'll peel back another business that smiles at you while quietly rewriting the rules of money.